For Tracy Money. So when Tracy recording, it's 2:57 p.m. that is Central Time. Today is July 23rd. Well, today we had a strong day on stock markets just about everywhere. It was pretty much green in every country. And this was particularly true for Japan because in the early hours of the trading day, the announcement that the USA and Japan have reached a trade agreement pushed the Nikkei up 3.5% and testing the all-time highs. That positive sentiment followed through into the European session, and the majority of indices were up. But then Swedish market was up 1%. Italy was up 1.33%. Switzerland up 1.5%. The FTSE 100 was only up about 0.4%, but we had positive performance everywhere else. To Asia, Shanghai was up 1.6%. And there's a growing perception that there's going to be trade deals announced before the August or the early August deadlines that were imposed by President Trump. So there are two ways of thinking about this. On the one hand, there's the taco trade, which is Trump always chickens out, and that he doesn't have the nous to truly impose the tariffs that he keeps talking about. There's an additional way of thinking about it, which is that the brinksmanship around tariffs was really more about ensuring that we have freer terms of global trade and that we're moving back into a more mercantilist way of thinking, that countries will pursue their individual interests without much consideration for alliances, or that geopolitical alliances will not depend on trade alliances, and that the two have potentially been separated and might take quite a long time to get back together. Well, with a positive tone on stock markets, then we didn't have quite the same demand for safe havens. So gold prices were down about $40. And then platinum was a little bit weaker, down 27. Bitcoin, having got up to 120,000 in early trading, closed out the day down about $1,300. Ethereum, which has been outperforming Bitcoin over the last while, was down more today, down 120, so coming back towards that $3,500 area. In the commodity markets, well, oil prices were pretty much unchanged. Then Arabica coffee was up 5. Copper had jumped by 10 cents in the COMEX contract, so certainly following through on the upside. Now, when we think about what else is going on, well, then palm oil was down by 15 today, so I believe that's the limit. And then orange juice continues to improve, and it was up a tad in here today. So when we take a step back and we look at what's going on, this is very powerfully bullish action by the Nikkei, and it's approaching the upper side of this range that's been forming since the beginning of 2024. There's a clear pattern of ranges, one above the last, and that had been evident in the Nikkei since 2012. Now those ranges are big, and then we had the big exception in the middle of 2020 where we had a significant dip, but then it rebounded quite quickly. The clear conclusion here is that as long as the region of the 1,000-day moving average continues to offer support, then this is a secular bull market. And then this also suggests that Japan is probably going to get a handle on its inflation, but that inflation will be a persistent trend from now on, that they have finally conquered deflationary forces. And then there's the clear conclusion here that Japan's decades of malaise are pretty much over. Then there's the broad picture around Europe. And I think you really have to look at a lot of back history and to really put into context just how long the Eurostoxx index has been going sideways for. Because the significant peak was in 2000, and we didn't really get a sustained breakout until 2023. So now it's really only breaking out of a 23-year base formation. And this is, I think, more convincing evidence that Europe is beginning to trend once more, and that all of the conclusions about the inability of Europe to make decisions and the creation of a nanny state in the aftermath of the global financial crisis and the sovereign wealth crisis, that we're potentially now coming to the end of that, and it's beginning to emerge. So what's really leading this advance is money creation. And on this occasion, it's really more fiscal stimulus. So you have several European countries that are spending well in excess of what they agreed to when the euro was created. You have a much larger European budget. You have Germany alone talking about spending $1 trillion on infrastructure and on defense. And then you have German blue chip companies banding together and saying they're going to spend about 100 billion. We're talking about some serious money here, and this kind of spending is what's helping to sustain this bull trend. So, on the one hand, there's a lot of talking about what the outlook for tariffs is, but it seems to be quite clear that the response to tariffs was to shake the status quo in the global trading environment. And there have been several announcements of significant additional spending. So when we always ask this question about where is the money going to come from to sustain a bull market, well, I think we're getting an answer here. And Japan has been engaged in fiscal excess for a long time. Europe is doing the same thing now. And then just this week, we've had China announcing a massive infrastructure project. And that is not just that it's going to be an additional $170 billion of spending, but what it is also signaling is that this lengthy period where China deprioritized infrastructure development is potentially now over. So the H-share index is trending higher here, and it's at a new closing high in here today. There's also the additional point, of course, that the H-share index is trading at a significant valuation discount relative to Wall Street. You have a forward PE of 10 and a dividend yield of 2.7. And let's just contrast that with the S&P 500, where you have a forward PE of 27 and a dividend yield of 1.2. So really what we're looking at here is China being half as expensive, and are in fact even less than half expensive as the USA. Now, obviously, there are geopolitical considerations, there are worries about the trajectory of governance in China. But if they're stimulating and that they're printing money in order to try and combat their own deflation, well, we know what that did to Japan's markets when uh, we had Abenomics and we had all of the spending, the money creation in response to that. Well, it has contributed to a massive bull trend in Japanese equities, and that has persisted for more than a decade. So then the big question for China is whether that is also going to happen here. Now, of course, we've seen that China's markets tend to be much more volatile. And when retail investors get the bit between their teeth, they can really run with a bull trend. And that generally contributes to the government getting a little bit worried about speculative excess, and then they lean in and try to stop it. So that is one of the factors that slows down, or I guess inhibits, long-term trends evolving in Chinese markets, simply because there's just so much feverish interest. Then let's think about India, where the Modi administration has been very keen to sign trade deals, and they're sending a group to the UK right now, and they've been very eager to sign a deal with the USA. The Nifty index is steadying from the 25,000 level, and this continues to look like a consistent trend of appreciation. One of the clearest trends as well that is very important in terms of the money creation cycle is the continued strong performance of banks, and banks performing well everywhere. Indian banks are still holding the breakout from the are breaking above the previous all-time peak. Then if we think about China's banks, and they have been ranging for really what feels like forever, breaking out about 4 weeks ago, and so far holding the breakout to new highs. So this is a very meaningful event where we had a significant range really beginning in 2015 and a major peak back in 2007. So now the index is right in the region of that big psychological 20,000 level, and this looks like some consolidation. But there's certainly the potential that the index can break on the upside here. Now, it's rather interesting here that these moving averages aren't really coming in from a low. It would suggest that whatever back history there is was even higher. I'm not sure that's especially accurate. Now, when we look at European banks, well, then, and I'm just going to look at the Europe banks rather than Euro, but this has also been a clear trend appreciation and coming off of really depressed levels. So it could be quite a while before we get back to the peaks in 2007, but certainly this is a breakout and it continues to be extended. And this is equally for the USA. So there are, I think, two important characteristics here. On the one hand, you have the fact that there's more money creation going on. There's governments that are spending. They need the money to come from somewhere, so they are reducing regulations. And the regulatory overburden on the banking sector has been a significant impediment to them, their ability to create money through the credit cycle. And that is now changing. Then, of course, we have the fact that it's just been a very, very long time since the global financial crisis, and balance sheets needed time to be repaired, and that has pretty much been done at this stage. When you have banks performing and stock markets doing well, it suggests that money creation is one of the factors that's contributing to this outperformance, and it's a rather healthy environment. Then the potential for structural development, not just in much of the rest of the world, but also in China, well, then copper prices were up almost 11 cents in here today, continuing to bounce on the 550 area. And this is now a sustained breakout from a 4-year trading range. So we're certainly in a new bull market here. And the point that I've been making for years is that it's impossible to have a big bull trend in copper if you don't have China participating. And now that we do have China participating, well, then that is driving this breakout. So that was the missing ingredient. And then when we think about the broader, the broader metals environment, quite the same dynamic moves in some of the other industrial resources. But will, if we're into a new secular bull trend for commodities where we're getting infrastructure development happening everywhere at once, where there's a clear intention to create alternative supply chains. Well, that suggests that there's going to have to be a lot of construction. And that's obviously going to be beneficial for the industrial resources. So the LME Metals Index is beginning to pull away now from the region of that 200-day moving average and pushing towards the upper side of that range. Then if we are going to see a significant trend of appreciation in those prices, it's good news for the miners. And the BlackRock World Mining Trust has started to gain more interest, and it was up another 10p today. But it's really been going sideways, and really sideways with a downward bias for several years. So this is really just the beginning of a more bullish trend. And the more back history we look at it, it really helps to emphasize just how volatile a trading environment we've had over the last 18 years. So this has been a powerful rebound over the last 3 months, and it suggests that the downtrend from the peak in 2022 is over, and that there's the potential here that it will go right back up to test the upper side of this range that's been forming since 2008. And that would be towards around the 800p level, and potentially by the end of the year, given the momentum that we're seeing. Now, what we've also started to see is a little bit of softer action in gold, and gold prices, which were really quite firm over the last few days, were a bit softer today. We're right at the upper side of the range. We have a very mild short-term overbought condition, so we're getting a little bit of consolidation right now. The other big point, of course, is that gold does well when the dollar is weak, and the dollar was weaker today. And the dollar index is back around the 97 level. And that's a factor that should push any downward pressure for gold. Then the 10-year yield was up a bit in here today. And gold does well when interest rates are declining because it removes a headwind in terms of the valuation. When you have zero interest rates and a deflationary environment, well then that's generally benign for gold. But if interest rates don't fall, well then that's something that will weigh on gold. But this continues to look like a bear trend for the dollar overall. And the imposition of tariffs is being hailed as a good thing, but it's also going to increase costs for consumers, and then they'll either pay up or they'll defer purchases. So it's not necessarily that tariffs will be outright inflationary. It's really a question of whether those goods are going to be totally essential. If consumers simply decide to keep their hands in their pockets, well, then that's not going to be inflation. And then, of course, the other question is, well, we had a big inflation because of disruptions during the that was caused was the massive amount of money created. I think it's rather doubtful that the Federal Reserve is going to rush to cut interest rates unless there's a real economic problem, and we just don't have one right now. And with home builders and banks pushing on the upside, then it really suggests that I think consumers are not really under pressure. And the evolution of a meme stock trend in the short term suggests that there's a lot of money floating around, that there's interest in supporting these kinds of companies that don't really have any profits or prospects, but they have large short positions and liquid options markets. So Beyond Meat, for example, was attracting some interest in here today. There's a very large short position percentage of the free float in the market. So I think it's important to look at the weekly chart because we are talking about a move off of really quite a depressed level. It's also worth considering that some of these companies that are attracting meme status now, really they bottomed about 2 months ago. So it's not like there haven't been positions built up in some of these. Then it's absolutely imperative for a meme stock, first, that there's a large short position. Second, that consumers have heard of the company. And third, that there is a liquid options market. So GoPro fulfills those characteristics. And the share has started to rally in here today. But we can see that these moves require sustained buying. The thing that really gets a meme stock going is not just that there is an outstanding short position, but it's also that you get sustained buying from retail investors, which puts increasing pressure on the shorts. And by absorbing the available supply in the market through purchases, then it removes some of the supply available to those shorts to cover. and then they have to pay up to draw in more supply into the market. So we're really only at the beginning of this trend. And there's a big question then whether there is the same kind of volume of cash available to consumers now as there was during the time when they were getting payments sent to them by the government in the post. But certainly there is a growing trend of companies starting to attract interest from deeply depressed levels. And that's also a measure of risk appetite. And of course, we've had a massive risk appetite for artificial intelligence. And then we have this index, which is back now towards the 15 level and went to a new reaction low in here today. So we're still looking at an environment where there's not much demand for shorts, and we're still in a benign stock market environment more generally. And I think with that, I will leave you for today, and I'll wish all the best to all of you.